Credit in the financial system. In 8th class, you people have studied money and different kinds of accounts which are operated in bank. There you know that when people need of money, they borrow from various sources. Some borrow money from bank, some may borrow money from friends or relatives, or some from money lenders. When it comes to agriculture, agricultural laborers, they borrow money from their owner, from their employer, where in the agriculture field agriculture laborers are working, they usually borrow money from their owner, and they agree to work less wages than the market wages. Here in this chapter, we will discuss different kinds of credit arrangements, which is very important in the financial system of a country. What is credit here? It is agreement, what you call, it's a time given to the person for paying the amount. So credit plays very important role in the financial system. So let us see that what is credit in financial system and how it plays very important role. Bank deposits as money. What is meant by bank deposits here? Money deposited in the bank, in the accounts, that is called bank deposit. Bank deposit also treated here as money. Today in the modern period, the money what we use to buy the things and pay the payments, there we use various kinds of currencies, various kinds of money, means various forms of money. That is paper notes, we know that what we have, 10 rupees, 20 rupees, 100 rupees, like that. Then coins, 5 rupees, 10 rupees. And bank deposits, that means the money deposited in the bank, also used here as money, right? So in the modern period, we find bank deposits also as money. So bank accepts the deposits and also pay an amount, that is as interest on the deposits. What we will do with the bank, generally we go to bank, we deposit some money in the bank. For our deposits in the bank, bank gives safety and also some interest. So money deposited in the bank is safe, and also we get interest, right? So here what is the importance of these deposits here. These deposits we can use as money whenever we want money. At that time, deposits can be used as money. And see, these are the deposits we can withdraw at any time when we require our money. So there is right to us to withdraw the money deposited in the bank. That is the demand. What is our demand? There is a right to withdraw money at any time when we require. On our demand, bank agrees to pay money to us when we require. That means we have the right to withdraw money when we require it on our demand. So on our demand, we are withdrawing the deposits what we made in the bank. So these bank deposits also called demand deposits. It means the bank deposits can be withdrawn on our demand when we want money. So these bank deposits also called demand deposits. You know, your father deposited some 20,000 in the bank. Last week he deposited. Today he wants some 10,000. He can go for withdrawing it. As he approached the bank for withdrawing 10,000, immediately bank pays the 10,000. So on our demand, we are withdrawing the money. So the deposits of the bank also called demand deposits instead. So what is the advantage for us by depositing money in the bank? What is the advantage? First is our money is safe in the bank, right? There is a security to our money in the bank. Second is that we get interest on the money deposited it. And in addition to these two benefits, there is another facility these bank deposits or demand deposits gives to us. It is this facility which lends it the essential characteristics of money. That means it can be used as money. Suppose there is no money in your hand, then you want to buy something, right? How do you buy it? By showing the bank deposits which are there in your hand. When we deposited money in the bank gives a bond to us, showing that so certain amount is deposited in the bank. That is called bond. And that bank bond, what we call bank deposits, bank bonds, what we call deposits, can be used as money. In the form of money we can use. Okay, at the time of exchange, we can use bank deposits like money. Okay, you have read of payments made by the checks, right? When there is no money, we will give checks to someone, right? Check also consider here as money, because we have money in the bank deposited one. So bank provides a checkbook to us. So when we give check to someone, there a payment is there. So instead of money we are giving a check, then they will accept it, because check is treated here money. The check what we submit to someone at a sales counter, the person who takes check from us, he can send that check to the bank in which we have account. Then from our account, automatically some payment is made for the person to whom we have given check. So check is acting here like a money, or by electronic means instead of cash. We know today we are using Google Pay, Phone Pay, eh, wallets, then Paytm. So what we do from these, we are sending some money by what goes when we use this electronic means. A signal is passed, right? So electronic means and checks are used here instead of cash. So one can withdraw money in cash or make payments by check. It makes these deposits work like any other form of money. Instead of cash, we are giving what? Our bond, which is in the bank instead. So since demand deposits are accepted widely as a means of a payment along with the currency, they constitute money in the modern economy. At present, bank deposits also treated as money. Suppose in a bank 10 lakh deposits you have made, then bank gives you a deposit form, a deposit bond that you have made a deposit of 10 lakhs in that bank. Then next week you are going to buy some land, a plot, then there you need to pay a payment. There is no cash. Then what you will do? You will give your bank a bond, that is a deposited bond. So they will accept it. Understand? It is also treated as money. So what is the facility offered here by demand deposits or bank deposits is it is also treated as money in the modern economy. This is the another facility we find with demand deposits or bank deposits instead. And you must know that the role of the bank playing here. Okay, for banks there would be no demand deposits and no payments by checks. If there is no deposit in the bank, our demand deposits and payments will not work out. So the modern forms of money, that what we call currency notes and deposits, bank deposits, are closely connected, okay, and working in the modern banking system. Okay, so this entire banking system is supervised, observed by the Reserve Bank of India, which is an apex bank. Reserve Bank of India, in short RBI, supervises all banks. So Reserve Bank is bank to bankers. It is the apex banks. All the banks works under RBI. Okay. So the entire financial system by the banks is supervised by the RBI, which is under government. Okay, so that the promise made by the banks to honor withdrawals in cash or payment by check is always kept. RBI promises to all the banks, and that promise only transferred to the depositors. So the government has to ensure that people's trust in the money keeping with the bank. The government has to ensure that people's trust. Government has to get the what? people's trust in the money kept with the banks in the what to call demand deposits instant in the form of demand deposits or fixed deposits in the banks will be with the people. The government have to get the trust of the people in the money kept with the banks. That means government should give an assurance to the people for their money which they deposited in the banks in the form of demand deposits or fixed deposits is always maintained and their money is available for use and accepted by all. See, if government cannot provide a trust to the people, then banks may not get demand deposits or fixed deposits to it. See, we see that generally what we see that here many people go to the bank for depositing money. Why? Because there is trust on the bank. Bank provides money at any time when we ask. Instead, it also gives interest. So this is what we call trust. So government responsibility is that it should create trust to the people to make fixed deposits or demand deposits in the bank, and it should generate trust to the people that money is always available for people for their use. Okay, so the Reserve Bank issues guidelines for working this system and examines its working. How the banks are working is examined by the Reserve Bank, because Reserve Bank working under the government should create trust to the people so that the people trust is maintained. When we lose our trust on the bank, then all the people go for what, withdrawing money, then the credit system will not work. So people trust is very essential. It means confidence to the people on the bank. So it is a main role. We see the Reserve Bank issues the guidelines to the banking systems to ensure people's trust is maintained. So the government has to ensure that the supply of notes and coins is in adequate amount and in good condition. When we go to the bank to withdraw money, we will ask the bank to withdraw certain amount of money. Does they say that what the money is not there? No. They say that okay, you do this process, you will be given money. That's all. That means always we see some amount of money and in good condition is maintained in the bank, because there should not be obstacle problem in supplying the water money to the people when they want to withdraw. Okay, when people approach the bank, they should not face the problem that there is no money in the bank. When people get a problem in withdrawing money, then it is that people trust is gone. When the people lose their trust, people will go on withdrawing their money, that bank system will collapse there. So it is a what to call responsibility of the government to ensure the supply of notes and coins in inadequate in the sense sufficient amount, and that too in good condition, so that the people do not face any problem in the currency notes which they use. Okay, then what is the main work of the bank here, right? Loan activities of the bank. Look at the figure given here 9.1. What do you see here? There are three things. One side we see that people, those depositing their money in the bank. There is a businessman. Look at that. He is a businessman and his money is depositing in the bank here. Similarly, a farmer who is getting money by selling the crop, in that some amount is depositing in the bank. And one government employee, a woman is given here. She is getting salary and her salary also deposited in the bank. So against their deposits, bank gives to them interest. What it gives? Interest. Look at here. What it is there? Bank gives interest to these people who deposited money in the bank. And this is one cycle. Understand? That means accepting deposits from various people like businessmen, farmers, and employees. It may be government employees or private employees. Understand? Right? So those who, why do they deposit money in the bank? Because they want security and interest, right? Against their deposits, bank gives some kind of interest. So they show interest in depositing money in the bank because it is safe there to deposit and they can withdraw their money with interest at any time. This is one activity we see. Understand what the bank is doing. Another activity of the bank is the money deposited by these people, okay, will become low, will become what to call savings to the bank. Understand? So the money deposited by these people in the bank uses that money in giving the loans. Okay, see, somebody want to buy a car, then he takes loan from the bank. Okay, somebody want to buy a tractor, a farmer want to buy a tractor, so these persons are taking loan from the bank. Somebody want to buy the seeds, then, or what to call pesticides, then loan he is taking from the bank. And one person is need of money to buy a house, home loan, okay, vehicle loan, house loan, like these different loans are provided by the bank from the deposited money by these people. So one side we see that bank accepts the deposits and extends the what, loan. As the loan is given to these people, loan takers, on the loans given to these people, bank charges some interest, right? So in return, these loan takers should pay interest to the bank along with the loan what they have taken. So from that, certain some part of interest is paid to the persons who had deposited money. Remaining interest is used by bank for their administration and for paying the wages, that is salaries to their workers. Understand? So this is the what a circular flow of money through a bank. Understand? Right? You know that many times you have gone with your uncle, father, or brother to the bank. Understand? So what do the banks with the deposits, right, which they accept from the public? Just now we have shown. So there is an interesting mechanism at work here. Bank keeps only small portion of their deposits as a cash with themselves. For example, all these depositors have deposited some 10 crores. Then in that some 5 crores, for example, bank keeps with it. Remaining 5 crores, it keeps in expanding the water loan. Right, so in this way we see that bank runs. Okay, this is kept as a provision to pay the depositors who might come to withdraw money from the bank. But the person who deposited money can withdraw his money at any time. So to provide money for a depositor when he demands to withdraw, there is need of certain amount to be reserved in the bank. So for this purpose, the bank always maintains some cash in the bank. Whenever the depositor want to withdraw, it should be available. This is how the banking started, because banks all over the world found that they could keep their promise of paying cash on demand. So this is the system. We see that the banks have provided confidence to the people. Okay, in the course of time the banks maintain their promise of paying cash to the people, okay, on the demand by keeping only a small fraction of money in the cash. Banks use the major portion of these deposits to extend loans. We have seen in the figure, right? It gives loans from the deposits instead. So the huge demand for loans for various economic activities we find in the market. Somebody want to buy a home, that is he takes house loan. Somebody want to buy a car, then he takes car loan. Somebody want to educate their children, then he takes education loan, right? So for different economic activities there is a need of money, so there is a great demand for a loan, so banks provide loan for various economic activities. We shall read more about this in the next class. Instead, bank make use of deposits to meet the loan requirements of the people. Whatever the deposits banks have, that deposits bank uses to meet the what loans. So this is the process. The banks mediate between those who have surplus funds, that is depositors, and those who need of these funds, that is borrowers. That means depositors who have their savings will deposit in the bank. Okay, so somebody is getting 50,000 salary. After his expenses, what is left, some 20,000 he deposits in the bank, that is called surplus fund, right? Some certain part of salary is depositing in the bank, so those who have surplus funds they deposit it.